Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne Man with David Ingles.
Happy Friday and good morning. Let's get to your top stories today. Asian stocks join a global equity market rally as a cooling labor market in the U.S. and tame inflation numbers reinforce expectations for a Fed rate cut next week.
It's all about Chinese stocks, so seeing further momentum as investors continue to pile into AI-linked companies. Alibaba's AI advances, including a new model, may fuel more gains.
And also ahead here in shows, China said to be considering asking state lenders and policy banks to help local governments settle these unpaid bills, estimated at over $1 trillion.
And Treasury Secretary Scott Bessent reportedly set to meet with Chinese Vice Premier He Lifeng next week to discuss trade and national security.
Welcome to the show and good morning and happy Friday. Michael Jordan's birthday, 2021. Feb 17, of course, for fans of the greatest of all time. That was the last time Asian stocks were at about these levels, a little bit more. 0.4%, give or take. I just looked at my screens right now. Takes us to a fresh record as far as Asian stocks go. All that being said, it's been a fantastic time to be an equity market investor. 8 straight days right now. Global equity markets, and of course, the latest foray here has really come in the form of AI. And of course, conversations around how low can the Fed go. TAIEX index is coming online, 1% to the upside. In fact, within these two markets, coming up on your screens, SK Hynix, you have TSMC, some of the other chip plays. We'll talk about this in a moment with Bell, but as you can see, that AI rally is continuing this Friday as we go into the weekend. The other thing we want to talk about too is on the macro front, right? So you have the dollar, quite a substantial drop overnight. We're back below the 1,200 level, I think 1193 and 97 and change right now, and we're certainly fully priced as far as the Fed goes in for next week. The question is, we're almost fully priced, in fact, for 3 cuts. Do we get to 3 cuts still? Given that it is a day-to-day, meeting-to-meeting conversation right now. We'll talk about ECB in a moment. Of course, some changes to their inflation outlook, 26, 27. And of course, the big story, though, has been separately in parallel but related to what we're seeing across global equity markets, is this 3% pop in equity markets. Alibaba, Baidu, that's a separate conversation on AI, according to the information coming up bottom of your screens. And of course, going into the open today, A50 futures and a 1.8% handle on the 10-year yield, right? Yields are pushing higher. Equity markets are pushing higher. Swaps are actually indicating some early signs of reflation coming along. I'll show you the chart later on as well. But yes, stars, things, signs are coalescing, Yvonne, for really this equity market rally to continue.
As we were reading the headlines at the start of the show, every single thing, is quite rare, was a tailwind for this equity market, right? Yeah. You talk about Alibaba, AI models. You talk about inflation in the U.S., which basically was higher but not spiraling out of control. And then you have the whole support system from what we're hearing from our Bloomberg sources of support for local governments in China. That certainly is the reason why we are seeing plenty of tailwinds to continue and to really end the week on a pretty strong note here as well. In terms of your agenda here today, take a look at what is still to come. Yes, the stock rally, southbound flows continue to be the strong sort of momentum behind that as well. We're watching levels like 38.83 for your Shanghai Composite as well. Sectors is still the AI trade, it's still the biotech. We get very granular within the AI trade now when it comes to some of these homegrown tech. We'll dive into some of these names coming up here as well. Baidu, Alibaba, there's a soar space sort of story from the information talking about they're both going to be working on their own sort of AI chips, the like here. PopMart, yeah, they're talking about mini boo-boos. The secondary market, things are looking a little bit less, I guess.
Signs
bullish.
of a bubble.
Maybe signs of this speculative mania might be coming to an end here, or fizzling out a little bit. And yeah, we're still waiting for credit data out of China as well. But yeah, I mean, it just keeps on going, the story when it comes to Alibaba. Every day, when you had fears of, are they tapping into the market to get funds? Is that going to be a concern? But then again, you have an 8% pop in the ADRs. It's like, nothing to worry about.
No, not for now. In fact, we were just talking about this before the show started, right? So in terms of market cap, Alibaba has now just, again, surpassed ICBC, and that was really the changing of the guard a few years ago when this value dividend play became very popular.
True.
Now Alibaba's back in focus. Of course, Baidu is, of course, another name that we're talking about there. We haven't actually talked about this as well at length. So next week, encouraging signs on the trade front.
Yeah.
TikTok, of course, and we understand from our friends, I think at Reuters, who have reported that I think Secretary Bessent is set to meet.
Yeah, at
the
least
Vice Premier.
you're seeing amongst the U.S. and China, side of things that there is still this goodwill to keep working and talking until at least we get a leader summit between Xi Jinping
at least it's no bad news
and President Trump, right? And I think everyone's counting down to the end of the year, whether it's APEC or the like, that maybe this might happen. So at least that's another sort of good positive factor here in this equity market, that those trade talks are continuing on as well.
Yeah, I mean, it's mid-September. That could happen in 6 weeks, right?
Yeah.
And end October, early November is the timeline for that conversation. And separately, as we were just talking about there, right? So no nasty surprises coming through out of the inflation report in the U.S. And on top of that as well, initial jobless claims jumping to the highest in 4 years.
Yeah.
So that really underscores perhaps the need really for the Fed to move next week. And the question is now 25, or do we get even 50? Anyway, let's talk about the big rally story across these equity markets. Alibaba, the latest iteration here in really what has really been many chapters in the Alibaba story this week. Let's bring in Annabelle, our tech correspondent, to take us through really what we're talking about here. Yes, so let's start things off with Alibaba, because there are other big stocks to name as well across the region.
I think it's such an interesting story. I mean, yesterday, for instance, we had that concern around Alibaba, this coupon issuance, essentially, or zero coupon bond issuance for the market, more than $3 billion. Would that be something that would cause a rotation away from Alibaba into other names? But actually, it's been the complete opposite effect. And it seems like investors are really liking that longer-term business. And the company said, we're going to go all in on AI, and that's what investors are really taking out of that. So you can see there that huge jump that we had in ADRs, for instance, closing at highs we haven't seen since 2021 for the company. It's not just around that story, the AI story. I think it's also how it's playing out. So, for instance, we've seen the company just in the last few hours saying that they've got a new QN model coming onto the market. They're saying that's going to be more efficient, do more with less, essentially. It's going to be 80 billion parameters. Only a fraction of those will be activated when it's actually in use. And so, again, I mean, it's just another positive sign, but a very frenetic pace of development from the company as well. And then as you had the information reporting that Alibaba and Baidu are starting to use their own in-house AI chips. You're not really talking about supplanting NVIDIA. They're still going to be using NVIDIA's products if available, but it is just sort of showing that they've got their own capabilities and they're growing them as well.
Talk us through the chip stocks and what's going on. I mean, SK Hynix announcing the development of HBM4. What does that tell us?
This is significant. So HBM4 is the next iteration. I mean, we had HBM3, now we're moving to HBM4. You're sort of changing the underlying architecture of the chip, and it's just having that next generation of computing power. So again, they're saying that they're going to have a higher bandwidth, and they're also going to be more power efficient to the tune of around 40%. But HBM4, the company's now saying that they can manufacture this, they've completed the development, and they can start to also roll out at scale. And so they're just, it's that push, the SK Hynix has just continued to be ahead of Samsung in this race around HBM, ahead of Micron as well, and you're seeing that today reflected. Yeah,
I mean, the stock's almost near vertical recently. Belle, other stories around AI recently. In fact, this morning, I think we've heard from, NVIDIA and OpenAI. What can you tell us about just this wrap
there's sort of two different OpenAI stories today, but the first one that we had is that OpenAI and Microsoft have signed an MOU to essentially look at the structure of the business. I mean, one of the big issues for OpenAI has been their non-for-profit structure, and that was causing issues internally, and some were wanting to be more of a for-profit. But essentially with this MOU, it's an agreement that they're going to be creating a corporation, a public benefit corporation within OpenAI, a public benefit corporation, or a PBC. You have sort of you can make money, but then you've got to use that money to do good as well. But the point is OpenAI is going to be putting money into that, and maybe that amount of money they're putting in could expand from here. So that's one story. The other story for OpenAI, which I think is significant as well, is we heard from sources that OpenAI and NVIDIA could be looking at a major UK data centre investment next week, when we've got a contingent of executives that could be travelling to the UK alongside Donald Trump. President Donald Trump I think that's also important to note because you're seeing that big rally today in memory chip names across the board. And that is because you do have not just AI chips that are needed for data centers, you have other non-AI chips that are needed as well. And you are seeing a big run-up in names like Kioxia, for instance, even Samsung's high today. And that is also because of that demand. And just to note, Micron, we had the analyst upgrade from Citi from 150 to 175. But part of that also comes down to the demand that Micron is seeing for chips that are used for data centers as well.
There's a lot to unpack there, but all seems like it's positive news right now for this market. Annabelle Jeweller's there, our Asia tech correspondent with the latest. And for terminal subscribers, you can hear more about China's recent world-beating stock market rally. There's going to be a live Q&A that starts in just about, 20 minutes time, 9:30 Hong Kong time, 9:30 p.m. if you're joining out of New York. You can also ask our reporters your market questions as traders watch for signs of overheating in this rally.
Yeah, and perhaps even furthers that conversation around the rally is how low can the Fed go, and might that actually also be a tailwind? In fact, just on that latter story, the Fed cut these bets in focus. Nomura joins us to talk us through the data and really how low we can get as far as the Fed funds rate is concerned. Coming down to the open of trade, the final session of the week just under 20 minutes away, the opening bell, Shanghai, Shenzhen, and in a beautiful Friday morning here in Hong Kong. You're watching The China Show.
Futures pointing pretty positively here this morning. You take a look at how things are looking, and really the Alibaba story continues for another day here as well, just given what we saw from the ADRs overnight. So certainly that is lifting everything here. And yeah, everyone keeps talking about this everything rally, because, the Fed is probably, we'll see, looks like the bets are more likely that they're going to cut next week.
Yeah, and the interesting part there is the likely dissenting votes will likely be in favor of a larger cut.
Yeah.
Right? So, how deep can they go? And just on the tailwinds we're seeing across these equity markets, right? So in about 6 minutes, we're going to get the pre-markets coming online here in Hong Kong. And I suspect that at that point, in about 5 minutes' time, we will likely be, and that could change, of course, likely be at a record high. Wait for that on the MSCI Asia Pacific. Right. Now, on the tailwinds across, no nasty inflation prints so far, weak jobs numbers in the U.S., initial jobless claims, the curve is on the left side of your screens. We're steeper on the 5s and 30s today, I believe for the first time in about 5 days or so. Really what that means for Fed policy and what the market is telling us where the Fed rates will be. I guess it's a question there.
Yeah, let's bring in Andrew Ticehurst, senior economist and rate strategist Nomura. He joins us from Sydney here this morning. Andrew, it's always great to have you. So, now that we got inflation out of the way, is this basically just going to be a slam dunk for the Fed to cut next week?
Yeah, good morning. Look, we think 25 basis points is pretty much job done, so very high probability of that. The inflation data last night was interesting. I thought it was a little bit tricky, so we had a higher reading on the core on the core CPI number. But when our economists track that through to core PCE, they've got that printing at 0.2, so that's a modest sort of number. So yeah, 25 basis points from the Fed. I think the language will be very measured, though. No sense of panic. That they certainly won't be suggesting the economy is tipping over, and we think this will come across more of as an insurance type rate cut.
Andrew, David here, I want to ask you also what all these revisions mean in the labor markets that we've seen in the last few weeks or so, and I wonder, markets are trying to figure out what the delta is on this change, particularly on the labor front. What's your sense of how quickly things are getting to the bad side of things, if any, here?
Yep, sure. So look, we did see 911,000 downward revision, 911K on the jobs numbers. They were the 12 months up to March, April this year. The more recent trend has been a little softer. So they certainly portray a picture of less growth momentum in the labour market. And the market is very toey about this on the signs for that the economy and the labour market might be tipping over. We saw a sharp spike in TY, lower bond yields, when that higher jobless claims printed last night. Look, our sense cutting through all of this is that the US labour market has lost some momentum. There is some fragility out there, certainly. But when you look at the details, we're not seeing large numbers of layoffs. Pace of hiring has slowed, but pace of firing has not picked up. And that's what you really need, I think, if you want to be a bear and say that the economy is going to tip into recession. So far, we're not seeing that. Our US economics team have got moderate but positive growth, something like 1% annualized over the next couple of quarters.
Andrew, we were talking about the steepening trade. Given what we've been seeing with rate bets, given this concerns about Fed independence, it seems like it builds a case for this steepener trade to further go on. Can it, or is it too has it been too much of a good thing in some ways already that it's no longer such a sure thing?
Yeah, look, this is a good question and one of the biggest issues for the bond market right now. Look, big picture, long term, I think there are a lot of reasons for caution and a lot of reasons to favour steepening. We can look at cyclical versus structural type issues, but on the structural side, high budget deficits, high deficit levels, political uncertainty, attacks on Fed independence, there are multiple reasons to think that curves can be steep. But, against that, markets don't always move one way, and those steepening trades have been very popular. I think what we've seen over the last week or two is with signs of weaker US data and a lot of easing now priced into the front end of the US strip. There just hasn't been a lot of room for the US short end to really rally. So I think we've seen some profit taking and squaring up on steepeners over the last week or so. So we have had some quite notable flattening over the last couple of days with that. But I think that's more of a positioning and cyclical story versus those longer term structural issues, which I don't think are going to go away.
How does that same conversation look, but in Europe, Andrew? What do you make of the fiscal concerns there?
Yeah, look, Europe has very large fiscal concerns. The spotlight, of course, has been on France. I can't see an easy way out there. Either a new prime minister tightens fiscal policy and creates, social instability, or a new prime minister does not, and so the community stays calm, but financial markets become unstable. It's very difficult to see a long-term solution out there. So those concerns are very real. I would say the ECB have got creative policies and backstops to try and keep things in order. But, I do think that those structural tensions are going to remain with us, for a long time to come.
Andrew, people have been talking or waiting for this breakout to the upside on the euro. Perhaps when you look at the commentary coming out of the ECB overnight, it looks like they're done, and I think they're 2%. Where do you, and I'm going to ask you about the Fed and that spread. Where do you think the Fed will be relative to the ECB? What's the bottom of the cycle in the Fed relative to the 2% where the ECB is currently?
Yep, so we think that ECB is done at 2%. A quick summary on Europe, we think growth is somewhere near trend, inflation is pretty close to target, and the policy rate, the depot rate over there is pretty close to neutral. So that looks like a really nice set of circumstances. So we think the ECB is done at 2%. We do have the Fed cutting 3 times, in our view, September, December and March at a pretty measured pace. That's actually a little less than the market is pricing. The market's got Fed funds moving all the way down to about 3% or so. We've got it stopping around about 360. So, so that suggests, a little bit of caution. But I guess, for the euro, our path would be higher. It's 50% a story of, stability and a little bit of fiscal expansion within Europe, and 50% of the story is concerns about the US dollar and the US macro backdrop.
Andrew, the BOJ also meets next week, around the same time the Fed's going to cut, potentially. I'm just wondering, there's reports saying that they can still hike at the end of this year, despite all the political uncertainty there in Japan right now. Do you agree? Can they?
Yeah, busy time for central bankers and central bank watchers, isn't it? Look, we don't have the Bank of Japan hiking until January. We think they're going to stay pretty cautious in wait and watch mode. I was looking at my Bloomberg screens before I came in, and I see about 8 basis points is priced for October, but we don't think they'll go this year. We think they will rather wait to try and understand the impact of tariffs. They've also got a lot of political uncertainty as well there, so they're not sure who the new LDP leader is going to be and how that might tilt things on the fiscal side. And, there's a lot of uncertainty about the US economy too, so we'll be watching their views on all of those things, but pretty confident they'll sit on their hands for the next meeting or two at least.
Andrew, the potential leadership changes in Japan, what does it mean for fiscal expansion, fiscal policy, and do you think the market's priced fiscal expansion in Japan?
Yeah, so a couple of people have already put their hands up, and a couple more we think will. Koizumi and Takaichi are, we think, the most likely contenders in the way the vote system works. We think they will be at the front. I think as far as the market is concerned, the market's kind of boiled it down to this. Takaichi favours fiscal expansion and would probably be more reluctant to see the BOJ hike rates. So if Takaichi prevails in the leadership election on October 4, we think you'd see dollar yen go higher. Koizumi is much more of a status quo sort of candidate, straight down the middle, so maybe not too much reaction if that is the outcome there.
Andrew, thank you so much. Have a great weekend, sir. Andrew Ticehurst there, senior economist and rate strategist at Nomura. Going into the open today, under 7 minutes away, we're looking at names like Alibaba. Check that out. Happy Friday. We'll talk about this in a moment. This is Bloomberg.
The good times keep coming for Alibaba. Take a look at that in the pre-market. We're up some 6% here right now. So there was, of course, that report of them developing their own AI chips. They're rolling out this new Quinn 3 next AI model as well. So there you go. More fodder for the stock and for all the bulls out there here today. And really seeing a bit of a recovery after that slight decline yesterday on the back of that convertible bond that they just issued as well. So there, Baidu as well is doing very well. JD, too, up 3.5%.
Yeah, let's look at PopMart, please, on the back of some information, and let me borrow this delicately phrased term from one of our producers, la bubble, on the back of some details that pricing around the mini Labubus might starting to become off the highs. Obviously, markets seem undisturbed by that information. We're still up 1% as far as that's concerned. Yeah. Evergrande Services, that's one to watch today. There we go, quadrupled 6. 38% to the upside. Lots to talk about here as it pertains to it's getting bids, of course, from state-owned companies. But, of course, all things equal, it's a good day to be in equity markets. It had been a good week to be in equity markets. We are nearing that record high here in the Asia-Pacific. Welcome back. As they say, there's no time like the present, and in a couple of seconds we'll be getting the opening bell, and by the looks of things in the pre-markets, it's going to be a good day to be long these markets, particularly the name that's come back in a very big way, names plural this week. Alibaba, Baidu's also doing well, JD.com amongst this cohort, Yvonne, of names that have been leading this rally yet again.
Yeah, but we have to talk about new names as well, right? Capricorn was probably the first one a few weeks ago. Yeah. I've had to add a few more into my sort of vocabulary here of just where part of the AI supply chain do they fall, right? Yeah. And certainly we're going to continue to watch those because some of them were up some 20% yesterday on the back of just the Alibaba news, and really kind of continue to see this AI trade on fire here. We'll see another day of that as we wrap up the trading week as well. But we did see basically that CSI 300 saw some of the biggest advances since mid-March already yesterday. Right now, we're seeing something a little bit slower, though, but yeah, still ending on the positive side of things here for the week. But we're watching very closely how some of these small chips and the chips stocks are doing here in particular. But yes, the small caps like the Starboard, like Chinex, they were up some 5% yesterday here as well. So we are seeing a bit of a pullback in Shenzhen here today as well. And we're watching very closely what goes on with, of course, some of these chip names we'll focus on a little bit later on. But yes, bond yields aren't doing too much. You do see a little bit of pullback in Shanghai crude here this morning, but CATL A shares are up about 0.8% as well. You flip the boards and see the Hong Kong story here. Of course, Alibaba, the tech space is once again seeing plenty of green. Alibaba is up. We're at 153 for that stock here right now. Right now, we're talking about JD also doing some 4% gains here. With Baidu, they're talking about, according to the information, bringing up their own AI chips, right, or making their own, and that really is sending the stock up 6% as well for Baidu and Alibaba. And you focus a little bit more granular, right? I mean, it was interesting that note from Laura Wang, Morgan Stanley, about the interest that they're seeing from U.S. investors and the willingness to, bring up their exposure to China is the highest they've seen since COVID, basically, right? But it's like names that maybe you haven't heard of, right? You've got to do your homework when it comes to humanoid robots, for example. You think about how these kind of homegrown sort of giants, or at least these winners, are doing here, right? Capricorn is up, 1.6%, the little NVIDIA, as some have called it. Hygon Information Tech, this is the one that's the AI chip designer in China as well. This was up some 20% yesterday. We're seeing another day of decent gains, and this is where we're seeing, this is Eptolink, Zhongji Inalight. These are some of these, I think they're called optical transceiver. I'm not going to go too technical here, but yes, they were also massively higher here. A bit of a pullback here today. Evergrande Services resuming trade. That's why we're seeing that big pop in the pre-market as well. But yes, the unit is getting bids from some of these state-owned companies as well. There you go. We're up 26% right now. Dave.
Okay, we're just getting some lines coming through. This concerns the speculated cash call coming out of really one of the best performing stocks because gold has been doing well. Zijin Gold is said to be, I guess, gasking around, engaging interest here for this $3 billion Hong Kong IPO, $3 billion IPO here in Hong Kong from next week. On your screens, 1.6% to the upside, so I guess underscores many things, right? Gold, alternatives, the current sentiment in this market, plus, of course, just the confidence from the corner office to tap these markets and raise cash when you can is I guess the philosophy there. Right. We'll set that aside for now. We'll be looking at this rally even further in a moment here. Let's take a look though at what's trending and making headlines across China's national media, and certainly how this is really being framed and covered on shore. Securities Daily reporting that the A-share market's refinancing boom, citing data that shows companies raised more than, on that story, in fact, quite timely, 800 billion yuan, or $112 billion so far this year. That's a 260% surge from last year, with most of the funds flowing into areas like high-tech and also manufacturing. Now, experts are expecting the PBOC to restart bond trading in the fourth quarter after a sell-off sent yields to multi-month highs. Now, analysts tell the Securities Times that weak sentiment may prompt the central bank to step in and inject long-term liquidity and then signal stronger support for growth.
And Bloomberg has learned as well that China is considering asking state lenders to lend to local governments so that they can pay unpaid bills owed to the private sector. And some estimates put the amount of unpaid to arrears around $1 trillion or so. Let's bring in John Liu, our senior executive editor. He joins us now from Beijing. So this certainly did move the market in some ways. John, tell us a bit more about how they're going to do this.
So maybe I'll start with what the problem is. With a lot of things in China, it goes back to real estate. Local governments used to get a lot of their revenue from land sales. With the real estate crash, that has dried up. And so all of these local governments ended up owing lots of money to local contractors, local suppliers that they weren't able to pay. Some estimates have put that at about 10 trillion yuan. That's about 1.4 billion US dollars. And so what we understand now is that the central government is looking for ways to help these local governments pay back these private businesses. And the way that the central government is thinking of doing that is getting state lenders to lend these local governments the money they need to pay off those bills. And this is important, and we know this is on Beijing's mind because we've recently had some previously non-public comments from Xi Jinping that were publicized in August. They're actually from that meeting, if you'll remember, back in February, where Xi Jinping met with Jack Ma, with Xiaomi's Lei Jun, with lots of entrepreneurs in Beijing. And we're learning just now that during that meeting, Xi Jinping actually talked about the importance of getting local governments to repay these bills, because without it, it was undermining China's trust in the government.
John, just to look at the other side of the equation as far as the banks are concerned there, have there been any concerns around what happens then if some of these advances then turn sour? I just wonder what the banks are looking at as far as their sort of credit risk is concerned here then.
I think it's really important to note here that the government is not helping, the central government is not helping to repay this money. The repayment is still up to the local governments. They're still responsible, but by extending these loans, the central government is actually moving the payment risk. It's currently with these local suppliers and contractors now, and by extending these loans, the government would be moving that risk to the banking sector. And so we have heard from some bankers concerns about these loans never, at the end of the day, never being paid off by these local governments, and them wanting some assurance from the central government that the banking sector, that these banks that are extending these loans are not going to be left holding the bag, as it were. And so that's why there's some nuance, some uncertainty about when some of this will happen and actually if it will happen.
John, thank you so much. John Liu, our senior executive editor in Beijing, for us underscoring this as really one of the other reasons this market has been rallying on top of many other things that we've almost spoken at length about in the last 30 minutes or so. Joining us now here on set is Eva Lee, head of Greater China Equities at UBS Global Wealth Management, Chief Investment Office, who's probably had a very busy week given the conference you guys had and this rally that's been taking place. So what kind of questions are you getting now from investors?
Obviously, the obvious questions, which is how that given some of the leading tech companies have gone up a lot. So whether this is still a time to go in, what's the upside should we expecting? What are the risks that we will be facing if we sort of invest at this moment?
And how do you answer those questions?
Well, I would quote what I learned from the results season, and I consider the results season really as a positive set of results, which alleviate a few of the client concerns. First is on the delivery app investment. It's peaking in third quarter, according to one of the management. Second, it's the AI monetization. I think that is really seen and reflected in the numbers on both of the leading companies. And lastly, the U.S. policy against the de minimis exemption that was stopped. How does that impact to that one individual company having U.S. exposure? And that they already diversified or diversifying the localizations, putting more supply chain locally instead of shipping from China. So I think that also helped. So these made us, sort of more confident and positive in terms of the outlook. Like in addition to the chips that they have used, like remember that was starting in April or May, the U.S. chip supply already stopped to China. But somehow, one of the companies' AI capex keep expanding.
Yeah.
So
and what were they buying? Yes. Yeah.
So what are they buying? They definitely have been buying domestic chips. And domestic chips, we all understand, is still be able to deliver the inferencing, function. Training function, maybe you need the top-end chips. So I think in a way, when we sort of try to understand the AI, model, what you need, what sort of recipe you need, I think in a way it tells you that maybe we do have other sources that will still deliver the function. But definitely, the part of it we still relied on U.S. chips. But there are a big part of it we probably can diversify.
It's probably a good time to have a look at who's actually buying into this rally. So we know southbound flows are coming here. So clearly there's a very big, there are big flows coming through from the mainland. So what's your understanding of who the main buyers are then of this equity market rally recently?
Let me quote who are the investors at the IPO first half. Then you get a picture in terms of raising, right? Capital raising. 70% actually from international investor. Out of these investors, majority of them, they are European as well as Middle East. These are the main guys.
These are the cornerstone ones?
Yeah, the one that we know, right? Yeah. And of course, apart from that, there are some local. U.S. investors, at least in first half, is not apparent in terms of the investment. I heard what you said earlier, and I think that could be coming, given that when we look at the world in terms of AI development, we basically understand that U.S. and China, they are, start monetizing the AI, story or function. And I think in a way, U.S. is trading at 28 times forward PER. China is trading at 17 times. This valuation gap would make people thinking about, hey, maybe do I have enough exposure onto the China AI, companies? I think that would drive, not necessarily I sell US and buy China, but probably if I were to increase exposure to this AI, big global AI story, probably China would still remain attractive.
Well, I mean, the valuation gap, I guess, is partly because the earnings simply look more visible in the U.S. And do you have enough information to make that sort of conclusion that there's enough there that the earnings are starting to become visible in China, as far as AI is concerned, and how they're monetizing it, to your earlier point?
Well, I think, in fact, as I quote that leading gaming portal companies, they clearly said that now advertising, they have a 20% year-on-year growth in second quarter, while the national retail sales only 6% growth. So that gap telling you that people are willing to pay for AI advertising, even though the business was not great. Second, it's on gaming development. They basically said now they can rely on the domestic gaming development because they can use AI. And then I think overall, another e-commerce portal also saying something similar. So AI monetizations to us, to China, is not just cloud computing. I think it's actual application, which is actually what they talk about, the second stage of AI development.
This week, it's all been about these Chinese tech companies trying to tap the market to raise funds.
Yes.
Yeah.
How should I interpret that? I mean, does it just go to show they still need a lot of cash to fight this competition that has continued to bruise, whether it's the AI story or even just food delivery, right? You mentioned how some things are peaking when it comes to margins, or at least the competition, but I still think that they still need a lot of cash to dig their heels into multiple sorts of fronts now.
Well, I think it's always a case, for running a company. I think, obviously capital market is very willing to give you this funding to support your business. Obviously, I should cap on it. And then remember, during the down times, they do buyback. They do actually very notable buyback. So in a way, as a shareholders, not me, not myself, but for shareholders, they should be very happy that, the company actively, working on that and return to shareholders when times is right. And then on the other hand, whether they really put this investment onto food delivery app, I don't think so. I think it's a matter of the broader AI development.
Okay,
Eva, we'll have more with Eva Lee, their head of Greater China Equities at UBS Global Wealth Management, Chief Investment Office. Yeah, it continues to be a good news story when it comes to, the AI trade in China, and Alibaba continues to be the one that is on fire here today. There you go. We're up 6% for the stock, Baidu as well, JD, Tencent, all rallying here. And we're watching homegrown tech, right? We talk about the likes of Capricorn. There you go. The ones that I haven't heard of, really. Dawning Information, Giga Device, Semiconductor, Range Intelligence.
Time for you guys to
higher today.
Read up on some of these names, I'm guessing. Plenty more ahead. This is Bloomberg.
Yeah, we talked a lot, and I mean, it's getting a bit tiring now about this whole AI theme and out of position around it here right now all week. Still with us is Eva Lee, head of Greater China Equities at UBS Global Wealth Management, Chief Investment Office. Yeah, we talked about AI. I mean, what other sectors are going to do well in this market still?
In fact, we have already seen some of the sectors that deliver good yields that have done well. I remember when I pushed financial, it was 9% dividend yield. Yeah. Like no one believed in that, but now it's 6%. So imagine how much share price have gone up to deliver that. So I think that remains the case. That because we have seen insurance funds, first half 400 billion RMB have been put into equity. It's not just that they reallocate more of them insurance money into equity. It's just that they have received more money. Remember, in the market, that property no longer the investment that people would be going for. Apart from putting the money into fixed deposit, which the fixed deposit rate can continue to go down, they actually have invested in insurance. And these insurance money, some of them, they give you a guarantee return. Like the last 2 years, not now, but 2 years ago, they used to give 2.5% guarantee yield. So 10-year government yield have been coming down. Now it's only 1.7, 1.8, 2.5 versus 1.8. So there's a gap. I need to find something else to complement that. So that's why they have been putting into equity. And in fact, CSRC encouraged them to do so. So that's why there have been support onto this sort of yield stocks, utility, telcos, energy, that's where financial, that's where the yields stocks are, coming from.
Yeah, the income plays. Are we seeing any strong evidence that, so we've talked about how there are three main sources of liquidity in this market rally, right? So one is clearly, as you point out, properties, not the first choice right now to park your money. Second, we talked about savings, household savings, how there's trillions sitting there. And of course, the bond market. How much flows are you actually seeing from fixed income products into the equity market, in the onshore markets?
Well, I think to quantify that, it's very tough because you really don't know the source.
Yeah.
But having said that, I think I give you one more number. So this 400 billion of reallocation into equity, but as a percentage of total, that stay unchanged at 13%.
Okay.
So meaning that it's not that they allocate more, as what I said
They're
earlier.
overweighting,
And they can invest more because 13% is very low. Remember, at the beginning of the year, CSRC advised the insurance company for the new funding, 30%, 30, should be going into the equity market, or advise them to do that.
Yeah.
So we do have some room for this sort of movement of funds allocated to equity.
What could derail this rally? I'm thinking about the back half. There's still ongoing talks about whether President Trump and Xi are going to meet. You still have deflationary pressures in this economy. Out of all the things that you think could be a risk, what would it be?
Asia market in particular, we have seen, sort of government sort of talks and talking to local brokers. Are you offering over leverage for your investors? Remember that was the key thing in 2015. That trigger this correction. But obviously we are not at that stage at all. Second, it's capital raising. We have almost no capital raising in Asia market, super quiet, unlike Hong Kong, right? So if there is all of a sudden very active capital raising, that will also trigger some sort of form of correction. But I think at the moment, if liquidity rally, where should I position? We have been advising investors on brokerage. Brokerage actually hasn't gone up that much somehow.
Strangely.
Hardware tech, and also insurance. These are the sectors that we think will benefit from this sort of liquidity rich rally.
You make a good point. I wonder why the fundraising environment outside Hong Kong has been so quiet, despite the fact that we're actually very near a record now on Asia Pacific. Why do you think that is? Does that indicate the outlook doesn't look too good for these corporates?
I think it's just the approval side.
Okay.
Rather than the companies.
Not the willingness.
They are very willing. Yeah. But I think that's why I said that could change.
Okay.
I don't think it will be an influx of capital raising, but we have very very much no capital raising. And obviously, that is not healthy for the market.
Other two sectors we haven't talked about, biotech and consumption, new consumption. How should I be looking at those two?
We have seen some news on the healthcare sector yesterday, and that actually triggers some correction. And interestingly, when I look at the flow yesterday, in particular yesterday, we have seen the southbound flow coming in to the popular stocks that we could think of this sort of biotech area. So you know that when international investors are a little bit worried about the restriction from the US side, I think the domestic investors see it differently. So that actually lifts or narrow down the correction yesterday. But I think biotech, it's a big range. And I would still prefer the CXO that they do, sort of out licensing. In terms of new consumption, again, it's all about valuation. There's one company that they have been actively expanding into the U.S., and their market share at the moment in the U.S. is very little. And I think there is still a room for them to do well in terms of earnings. But again, it's all about earnings and valuation.
I think we're all smiling because we kind of know.
I know you can't say it, but I think we all know which company Eva's talking about.
I mean, just look at social media. I think you're probably going to figure that out. Hey, you'll probably see on the back of this break shortly. Eva Lee, thank you so much. Have a great weekend ahead. Head of Greater China Equities at UBS Global Wealth Management Investment Office. Okay, terminal subscribers, by the way, ongoing right now. So if you have any concerns, any questions, any queries, or anything to add, in fact, to this market rally, right now taking place, live Q&A with our team. You can also ask, by the way, our reporters there, the questions. But do join, of course, the conversation. Right, welcome back. Just a quick glance across the sectors and parts of this equity market that are moving quite substantially. It's actually quite difficult to pick because almost everything is on the way up, particularly here in Hong Kong, where we're better by 1.4% first 25 minutes of the session. Plenty more ahead.
Welcome back to the China Show. Here's a look at the Hang Seng, just a half hour in the session, and it is looking pretty sunny skies out there. 1.4% to the upside for that. And of course, I think Alibaba, the whole tech trade, AI trade continues for another day here as well, with Baba overnight announcing this sort of new AI model, Quinn. We'll talk a little bit more about that there. But certainly that is lifting, and continue to add more to this whole everything rally on the back of that U.S. inflation print, which did look, relatively speaking, pretty tame overnight, Dave. Yeah, no nasty surprises there. So that does seem to be going according to script. In fact, maybe the additional boost that markets might get was if the Fed move 50, or if they didn't move 50, maybe guidance that maybe, or acknowledgement that the labor market might be moving to the downside. Now, I think the other thing that we are talking about as well is really this chip rally that we're getting outside, separately from the Chinese AI story, which is really also giving that entire sector. And I'm guessing there's a mechanical flows coming through here as people come into these ETFs, and then that then goes into liquidity in the equity market rally, because you're seeing just this broad cohort of chip makers across the region really rallying quite substantially. Anyway, I'm stealing a bit of the thunder there, but we'll get to that in a moment. Right, let's take a step back. Right, where are we? What's the macro picture looking like? Hang Seng China's at the top of your screens. We talked about how this rising yield environment in China might be indicating some flows are coming through or coming out of the fixed income space into the equity market. And we're calling this early reflation signs in the Chinese markets, because when you look at a one-year spread on swaps, it's actually now back to, almost timely enough, we're almost 1 year. Almost a one-year anniversary of that PBOC briefing, September 23, I believe, of last year, 9 a.m. was when things really kicked off, and you really see that as far as the equity market chart is concerned. Point number one. Right now, where are we on the earnings story? That's the key question, right? So we've had multiple expansion. When do earnings start to come in and bring that ratio back down? So
equity market still, a different benchmark. Let's get it up, guys, if we have. Do you have that, please? Thank you so much. No, not this one. Anyway, we'll talk about this later. What is this anyway? Lower yield to follow US dollar, lower... Anyway, okay, live TV. We'll talk about this later. But yeah, anyway, Yvonne, save me. Yeah, we'll fix this. Yeah, please. What? I feel so vulnerable.
I was just watching you just struggle on live TV. Yeah. All right, let's talk about this. Don't cover our faces. Yeah. All right, take a look at Alibaba there. I continue to see a lot going on there. 6% upside there for Baidu as well. There was this report from The Information talking about both of these companies looking to develop their own AI chips. So that's really sending a bit more fuel into this AI trade as well. JD.com, Tencent. We just had Eva Lee from UBS, saying when it comes to these, food delivery subsidies, they feel we've reached a peak there. So maybe that's signs that there's still a lot of stories around the tech space that you can still look for opportunities here right now. In terms of the chip stocks, talk about the little homegrown, little kind of champions, right? Where Capricorn certainly is. Oh, there you go. We're up at 4% right now. But we're also watching the overall chip space in Asia. SK Hynix coming through, announcing this development of HBM4 that is lifting that stock here. We're up 7% for SK.
Okay, let's get back to our top story today, Alibaba, and bring in our tech correspondent, Annabelle Julius, of course, to help us understand what's going on here this week here, Belle.
Well, I mean, it's been a very strong week for Alibaba. I think they really tested the market appetite for the stock with their debt issuance. We saw the zero coupon bonds, $3.2 billion being raised for their AI efforts, and that was a real test for market sentiment and market appetite for the stock. But it really does seem like investors like it. They also like the overall story. They like the investments the company's making in AI, even if, you can also point out that they've got a really high capex, but they're yet to really see that ROI. But the ROI is growing, I guess, even if it's a far cry off how much they're actually putting into the technology. But in terms of the actual updates, you mentioned, for instance, we've got that new Quen model, for instance. We've got them also information reporting that they're looking at using in-house chips, so they're continuing to build out their own capabilities. But it certainly just does show that sort of pace of AI is very frenetic at the company as well, and they're very, very focused on it as well.
HBM4 for SK Hynix said that they're completing development. When can we expect mass production then? Yeah,
well, they're actually saying that they're readying mass output now. They've already started some early shipments of the 12-layer HBM4, but essentially, just to make that distinction, previously we've been at mass output of HBM3E, which was sort of the intermediary between HBM3 and HBM4. But HBM4, essentially, it has more bandwidth. It's also more power efficient as well. And so the company is really opening up that lead once again between Samsung, Micron. When it comes to HBM, it's a critical technology that's used for AI chips. And so, again, you're seeing that reflected in the stock price. It's been a huge run just year to date. But today, you're seeing some big gains as well.
Yeah, and sending the Kospi to at another record. OpenAI, there's some stories going there. What's kind of significant to you?
There's two sort of OpenAI stories. On the one hand, today you had this announcement of an MOU with Microsoft to create a public benefit corporation within OpenAI. So a public benefit corporation, essentially, it can make profit, but it needs to also have ESG goals as well of how they plan to use those profits, or at least run alongside the business. That's one story, and it's sort of been an interesting one because we've continued to track sort of the tension within the business around making money, being a non-profit as well, even though the company says they're going to keep that non-for-profit structure ultimately. The other story, which I think is more significant probably for markets, is what we just had in the last hour or so, which is OpenAI and also NVIDIA, possibly, this is according to sources, but traveling to the UK next week alongside President Trump, other US executives, but essentially looking at making a major investment into data centers in the UK. We know this is the kind of investment that the UK wants to see, but I think in terms of the markets, we're really seeing a big run-up in some of the memory chip names, SanDisk, for instance. Microsoft, you had that profit target upgrade from Citi, for instance, overnight, and that was also off the demand for data center chips. But you are seeing not just AI chips in demand, but it's also the legacy chips, memory chips that are also essential for data center projects as well.
Belle, thank you so much. Annabelle Julius there on the latest as far as the tech front goes. Okay, as promised, and apologies for that other graphic, which was actually quite relevant. I just got my head around that one. And, of course, yields and the dollar story, which is, of course, the macro conversation that we've had. Okay, so where is the earnings story? Because the valuation in the Chinese equity market rally are actually now trading, because of the rally, at one standard deviation above the historical mean on MSCI China, right? So at some point, earnings have to come through and bring this back down. Yeah, so... Yeah, and at some point, yeah, we'll see if the money keeps flowing out of CGBs, for example.
Well, we've been tracking, right, this sort, relatively speaking, is not like a melt-up, but in China maybe it is kind of a melt-up.
Yeah, relatively, yeah.
We saw, I think, this week, some of these bond yields in the curve did head to like 2025 highs as well, right? There's a lot of anticipation of maybe anti-involution may kind of ease the pressure on deflationary, in deflation and all that. And really, when it comes to U.S., I thought we were talking about CGBs, right? Because local investors are really once again warming up to Chinese bonds after a sell-off.
Yeah, not this one.
They're to multiple times.
I think we're 2 steps ahead.
Iris Young, she's with us here right now. Okay, let's talk about CGBs.
Yeah.
First of all, tell us a bit more of the recent sell-off and what has triggered it.
Thank you for having me, Yvonne and David. First thing is the investors' rotation into the stock markets, because as we know that the stock market has been performing very well this year. That's hurting investors' demand to the safe havens. And the second reason is that because Beijing has rolled out these anti-involution campaigns, that's hurting people's expectation for future inflation in China. And we are already seeing some signs of inflation improving, and there are some talks in the market already saying that the PPI may rise toward the positive territory by the end of this year. So that's challenging one of the fundamental theory of the bond markets. That's helping the bond bull last year, that the China's deflation will continue for years, and then that will boost the bond market.
Okay, now we're looking at, I think the 10-year yield is at 1.81%. What's the outlook for the CGB market?
I think the market has been very divergent. They're expecting a wide range of 1.6 to 2.2%.
Okay, that's wide.
Although the 2.2% is for the next 12 months, but 1.6 is for by the end of this year. So CITIC Securities yesterday had this note out saying that they're expecting the current bond sell-offs are excessive, and they think China's economy is still very fragile, and then the bond yields will continue to drop. And I guess for especially some of the financial institutions such as the insurers, they will have to increase their durations because they need to ensure that their investments are safe enough.
In terms of catalysts, what are investors looking at right now to re-enter back into this bond market?
So one thing is that they are assuming that the PBOC may resume the bond buying very soon, because for China you still need to sell more bonds to help the economy. So currently the bond yields are too high, so that's not good for the PBOC, for the Ministry of Finance to issue more bonds. And then the second thing is that they are looking for potential reversal in the stock markets. Once the stocks rally pause, that may be a good opportunity for bond investors to re-enter the market.
Iris, thank you so much. Fantastic. Iris Ouyang there on the latest in the CGB space. Coming up here in shows, and we just talked about bonds. We'll continue the conversation around fixed income. With JPMorgan Asset Management, they give their Fed expectations, what strategies will work amidst this environment of maybe lower rates but not too low, maybe higher inflation but not too high. They favor local rates in the Asia-Pacific. Julio will be outlining his team's views coming through. This is Bloomberg. Okay, let's have a glance at the Treasury market. So we're still waiting, and maybe at some point we'll get there. 4% on the 10-year yield following the drop we had overnight. And as you can see, we're slightly reversing that at the moment. And of course, the other thing that stood out certainly this week has been this flattening of the curve on the 5s and 30s. Today, of course, we're slightly steeper on that as well. But I think 5 or 6 days going into this morning, that was certainly the case. We're coming off inflation numbers coming through, and we're also coming off a fairly weak jobs print on the initial jobless claims in the U.S.
Yeah, at one point, we had the U.S. 10-year had a 3% handle on it after that U.S. inflation print came came through. So for the most part, I think it gave the almost all clear, I think, for the Fed to cut next week, just given that, as Dave mentioned, we didn't see these numbers really spiraling out of control. Let's bring in Julio Callegari, CIO of Asia Fixed Income at JPMorgan Asset Management. Julio, it's always great to have you. Is everything rally that we're seeing has really been underpinned by what people think the Fed's going to do next week. Stocks and bonds are both kind of rallying at the same time. Can that really continue for some time, you think?
Thank you for having me.
Yeah.
Yes, I think it can continue because, it's an environment, it's this Goldilocks, which is predicted on the idea that we have a slowdown, but the Fed is kind of preemptively making sure that this will not go too far. So this is a very benign backdrop if you think about, rates not being too weak, while financial conditions are easing because of the Fed easing, and other central banks will follow also easing, which tends to be supportive to risk assets. So I think we can continue to see that for a while.
What's the assumption on global growth you're making? How I don't want to use the word bad, but how soft and cool do things get?
Well, if you put in perspective, U.S. growth was running, let's say, until last year, close to 3%, and then we saw a slowdown more between 2 to 2.5.
Right.
Now we probably go to 1.5 to 2. So something that is moderating, but not meaningfully. At the same time in which China is the same, right? There is also moderation that we are expecting ahead, including China, but it's not something that would be too bad.
How should I look at the steepening sort of trade that we're seeing across treasuries here right now? We just had a guest say, look, there is reason to kind of have caution to this because it has gone so well.
Right.
Where to next in the steepening trade?
Well, that's true. The steepening became a very popular trade, right? Because it's also correlated to the receiver. If you want to, be long rates, you can also use that as a proxy. That's what the market was doing. And with all this narrative about potential fiscal deterioration and what is happening with the Fed, so it was sort of, a way to put everything together in a trade that was the steepening. We still think, that the curve has room to get steeper. But what is happening now is probably, some squaring of positions because, it was very crowded.
Yeah, it was very steep.
Very steep, very crowded. And we are seeing some adjustment. But we still think that as the Fed proceeds, with the cutting cycle, we think that the steepening bias will remain in place.
Something I noticed, I was looking at the screens earlier before you came on. High yield has done well this year. In the last month or so, it started to pull back a little bit relative to rates, IG, for example. Why do you think that's the case? Do you think that continues, or does high yield continue to give you the best returns in this market?
Well, we think that spreads in the IG space, I think the good quality names, is very tight, right? It can get a bit tighter, yes, because the scenario is okay, and particularly in Asia, there is very limited supply. Right. So we structurally. So we could see a little bit of further tightening in spread in IG, but the returns will be basically set by the treasury market because the spreads are already tight.
Yeah.
The beauty that we think, for the high yield space is that, one, it has, of course, more juice versus the treasury. And two, when we compare, particularly in Asia, the high yield market versus the developed market, we still see, like more than 1%, premium, which we think that over time will compress. So that's why we have a bias for the high yield market in Asia.
And also local rates here in the region. Tell us a bit more the rationale behind that, and what assumptions are you making on the dollar too on that front?
Right. We think that one of the key hurdles for people to hedge their exposures back to the local currency is the fact that U.S. has been a high yielder, right? But again, our assumption is that the Fed will be cutting rates, let's say every meeting for the next meetings, and then finally the cost of hedging is going to be reduced. So we think that's the key element in which we have the combination of, one, the scenario that I mentioned before, that the global economy is not too bad, it's just slowing. and the Fed is easing and reducing the cost of hedging. And we have this massive amount of investment from Asia into U.S. that we think it's unhedged. So that's why we think there is a very clear bias for the dollar to get weaker over time as we go into year end and next year. So that's why we like so much the local bonds, because you will capture, the weakening dollar, point one, and the fact that the central banks, many central banks in the region, will be cutting, and you can have lower yields. So we have the capital gains related to the dollar weakness and related to lower yields.
I think we touched on this before. It's always very scary when it's as clear cut as that. And I wonder, is there a tail risk that you're looking out for as well? And the reason I bring that up as well is on the local rates front, are you concerned at all with some of the disruptions we're seeing in places like Indonesia, for example?
Right. Well, we think that it deserves, to be cautious, particularly if you buy very long-dated bonds, because, there is always the risk that the market will ask for more premium.
Okay.
But the way we see it is that particularly, in the short end, the central banks will anchor the process anyway, so you are relatively safe there. And you're right. I mean, we always should be cautious about the dollar. We have seen ebbs and flows before. But truth is that, the local market has been the star year to date, right? Is by far outperforming, the dollar exposures.
Yeah.
And we think that this is only the beginning because, again, Asian investors, they are really unhedged. Has been this allocation into dollar for so long, for so many years, that once you start the process, I think this could continue for some time.
We were just talking to a reporter about the CGB market, right, where there's a bit of a reflation trade, a bit of one, you could say. Does that lean more interest in really getting back into this market in some ways, or how are you viewing it?
Yeah, we think that it's becoming more attractive. We are more neutral in the CGB space at this point because we think that it would not be, a surprise to see more allocation into China equities, take into account that the base is so low, right? And Chinese households have been accumulating deposits and fixed income, but not equity exposures. Yeah. So in that sense, we think that this could continue, and in this sense would be a hurdle for rates to go down. But again, our baseline scenario is for China to slow down gradually. And that's why we think that, we are not going to have a lot of widening in CGB's yields anyway, which means that over time, this is going to be an opportunity.
Julio, thank you so much. It's nice to see you have a great weekend ahead. I think the weather's quite nice this weekend. That's the forecast anyway. Julio Callegari there, CIO, Asia Fixed Income at JPMorgan Asset Management. Right, so we're looking at an equity market rally on your screens. I was joking with Yvonne, question mark, that I'm not going to get a haircut until the Hang Seng hits 29,000, which could be disruptive, but we'll see. Plenty more ahead. This is Bloomberg.
Some big stories that we're tracking for you this morning. Former Brazilian President Jair Bolsonaro has been sentenced to 27 years and 3 months in prison. That's for plotting a coup after his 2022 election defeat. And this makes Bolsonaro the first former president convicted of such a crime in the country. His lawyers are expected to appeal his sentence. The U.S. has warned it will react accordingly to what they call a witch hunt. President Trump has asked a federal appeals court to pause a lower court decision blocking his ouster of Fed Governor Lisa Cook. The request for a stay order would likely allow the firing to take effect before the appeal is formally heard. The administration wants a ruling by Monday, the day before the Fed board starts meeting to vote whether to cut interest rates. Now, if the request is denied, Trump is likely to go to the Supreme Court. Bloomberg has learned NATO is preparing a defensive military measures after a Russian drone incursion in Poland. A source says the move is to strengthen deterrence across the alliance's eastern flank, and they say there will also be a political response. Meanwhile, President Trump says the breach could have been a mistake and expressed his frustration with the incident that has alarmed Warsaw and other allies.
Could have been a mistake. Could have been a mistake. But regardless, I'm not happy about anything having to do with that whole situation. But hopefully it's going to come to an end.
All right, let's just have a look at these markets. About an hour into the session here, so 1.5% to the upside. The rally continues. We're close, but not there just yet on the records as far as the Asia-Pacific benchmark is concerned. That trading, that level is specifically, if you're curious, that's 220 spot 64. So a little bit of a nudge, and we'll get there. Anyway, be patient. We have more than a full half day left. CSI 300 is also seeing some upside, 0.3%. I just had a look at my screens. In fact, almost fittingly, the Hang Seng, the Nikkei, and the Kospi index, the three benchmarks you see on your screens, are actually the three best performing global benchmarks globally in the last 5 weeks. The Kospi's ahead, then the Nikkei shortly behind, and of course where you are as far as the Hang Seng index goes. Yeah, so there we go on the Asia-Pacific benchmark. Session highs there, and within this market, of course, it's really this move into chips and semiconductors, and the stories around Micron was a really big help. Oracle, of course, at the start of the week, and of course this morning, the story out of SK Hynix is really pushing things forward there.
Yeah, so and then that stock was up and really lifting the Kospi to a record as well. Alibaba continues to see gains here today. This is Bloomberg. $11:29 a.m. in Tokyo. Japanese markets are heading to the lunch break there. And yeah, it looks to be a happy Friday if you're along these markets, right? We talk about Japan being one of the best in terms of global equity benchmarks out there in the world this week alone. We're up 0.7% for the Nikkei. Topix is also up 14 points. Dollar yen is weakening here right now. And of course, we got through some key bond auctions as well in Japan. So there you go. And we're pretty close to a record for MSCI Asia.
Yeah. The scary thing about this is there are no visible risks out there that are being priced properly, right? Whenever that seems to be the case, I mean, do you continue to sell vol and go long on the benchmarks, or is it now cheap enough to go start hedging? But then again, of course, in a couple of weeks' time, we're entering really one of the best parts of seasonally, at least for the markets, right, going into the year end. And I guess it depends on what the Fed says. Let's take one week at a time. Okay, the BOJ's next week, and that's one to note, and how they frame that within the chip space. This is really, that's come alive in a very big way, whether that's markets in Taiwan, markets in Japan. You have this really long list. SK Hynix is one, of course, in Korea. The chip space has really come back in a very big way this week. And as you can see, just today, some of the gains there. And a lot of this is also down to that SK Hynix story that we talked about earlier on with Bell. What does it mean on a benchmark basis? Put everything together, 220, largely speaking, is the level we're tracking on the MSCI Asia Pacific. We're softer on US futures, but as you can see, like most, as far as market breadth is concerned, this is really a good one as far as positive breadth is concerned across this market, Yvonne. Yeah,
and if you want more good news, we're hearing that there's more U.S.-China trade talks that are going to be resuming in terms of next week in Spain, where Treasury Secretary Scott Bessent is set to meet with his Chinese counterpart, He Feng. For more, let's bring in our chief North Asia correspondent, Stephen Engel, on what do we expect?
Yeah, I mean, it's good news, obviously. I mean, they've met in Geneva, they've met in London, now they're going to meet in Spain. So it's a good development, obviously, at pretty much the highest level, aside from, of course, a meeting between Xi and Trump, which possibly could happen next month around the time of APEC. But I'm getting ahead of myself. They're going to meet next week. We've gotten Treasury Department officials confirming that, and essentially they're going to talk trade, no doubt. They're going to talk about, according to the readout, national security issues. They're going to talk about TikTok, even that stalled deal, or wherever we stand on TikTok right now. Also, money laundering issues. So there's a whole host of possibilities that could come between these two individuals. But it's a really good sign. I mean, I think Scott Bessent and He Feng have a good rapport. He Feng is a man with a ready smile, unlike maybe Wang Yi, who's a little bit more dour looking and more poker face, a career diplomat, obviously. He Lifeng, I think, has been a good face for China in these negotiations for the two sides with vast differences to come together.
Yeah, on the tariff front, something that's reemerged this week is
Mexico
and China, right?
Yeah.
So, we know what Mexico's planning. China's responded with a very sharply worded warning. What's the latest there?
Well, yeah, I think it's very clear what China is drawing from, and they're basically saying you're being pressured by the United States to add these tariffs because of what the U.S. is doing. The U.S. wants its trading partners like the EU and others to also put tariffs on to the Chinese. And Claudia Sheinbaum, of course, has had her difficulties with Trump as far as their cross-border issues, whether it's fentanyl or trade. But she's made this proposal of upwards of 50% on Chinese goods into the Mexican economy, not just with Chinese, but also other, mostly Asian economies that do not have a direct trade agreement with Mexico. Some 1,400 categories of goods, including EVs, including auto parts, and steel even. And it's interesting because if you saw in the first half trade flows this year, Mexico surpassed Russia as the #1 export destination of Chinese EVs. And Claudia Sheinbaum and her economy minister, who's heading up the trade negotiations globally, is basically saying this is making distortions in the local economy. So Sheinbaum has clearly said that this proposal, which is no guarantee that it's going to be passed, is basically in response to the distortions and protecting her domestic economy, not pressure from Donald Trump. Well, coincidentally or not coincidentally, guess what's happening simultaneously is ongoing negotiations between the U.S. side and the Mexican side on their trade issues. So the Chinese, they're not mincing words. They mentioned the United States specifically, and they mentioned bullying again. Bring up the full screen quote. This is from the Ministry of Commerce. In addition to what they said is they urged utmost caution by the Mexicans and think twice before doing this. And they said, when tariff abuses by the United States have triggered widespread opposition across the globe, any unilateral tariff move by Mexico, even if taken within the WTO framework, would be regarded as an act of appeasement and compromise towards unilateral bullying. But again, as Bloomberg Economics column piece today mentioned, China has to walk carefully on this one because other nations are watching this development very closely because they too have been flooded with cheaper Chinese imports. How do they respond? And I think they're going to take a page from how the Mexicans handle this.
Yep, well, another reason certainly to follow this story even closer. Steve, thank you so much. Stephen Engel there, our Chief North Asia correspondent. We're about an hour and 5 minutes into the cash market session, 1.5%, and I'm now looking at a 10th day of inflows across the Stock Connect today. Yep, some more buying is coming through. Plenty more ahead. This is Bloomberg. Right, my script says check shares of Hyundai, but there's nothing happening. I guess it's part of the story. In an interview, there we go. Thank you so much, live TV.
Like they're listening.
In an interview with Bloomberg News, Hyundai CEO Jose Munoz revealed that the construction, and of course this is the big story here, right? On the Hyundai Motor LG battery plant in Georgia is now facing months of delays. Now, Munoz said that the setback is a direct result of a labor shortage that was triggered by a recent raid by U.S. immigration authorities. Let's bring in Jenny Thomas, our sole bureau editor, who's with us right now, to just get us up to speed on where we are with this story. And this story keeps giving, Jenny. What's the latest here?
So the latest in terms of the arrival, I think in the afternoon, a plane carrying about 316 people, which includes 300 of the LG plant workers, will arrive in Seoul. So that's where, in terms of the detainees are. And the broader question of how this is going to impact South Korea's investment going forward, there's still a lot of question marks about what kind of visas U.S. will eventually settle for, which will pave the way for smoother flow of workers into US, because that's pretty critical for any of these investments to follow. And that's where things are getting a bit heated now. We don't know yet whether there will be a special category of visas that will accelerate the inflow of the employees into US. That's what South Korea wants, and that's kind of the solution they're hoping for.
And we did hear from the president, Lee Jae-myung, talking a little bit more about these U.S. investments made by Korean companies. And specifically, is that all in doubt now, given the situation in Hyundai? Let's take a listen.
사실은 당황스럽죠.
To be honest, it's baffling. But I think this also reflects some cultural differences between South Korea and the United States. This could probably have a significant impact on future direct investments in the U.S. Therefore, we are negotiating with the U.S. to ensure that visa issuance related to such investments is handled properly, whether by securing more visas or creating new types.
And Denny, there was another great story on the terminal that talked about the ongoing friction that was already happening before this raid between locals, that felt left out. What does it tell us about what's to come? Are the economic ramifications just beginning here?
Yeah, so I think some of the locals, as our story quoted, were not very happy with the fact that most of the jobs are going to South Koreans, and there is a bit of element of that. And if you listen to the CNBC interview that Commerce Secretary Lutnick gave, he was also making the point that what U.S. wants is specialists come in, do the groundwork and then head out and then lead the longer-term jobs to the locals. So I think that's what South Korea companies also want. There isn't an expectation here that people going into U.S. wants to stay there for long. They all want to come back. But I guess the visa category, which allows them to do the job that has to be done, that is pretty critical. And if that's done, I think the locals will be happy to see that they are also getting the benefits of the big investment boom that's happening. And our story that rightfully says right now there is a perception that it's all foreign money and foreigners benefiting from it, and that has to shift to where the locals benefit from these investments.
All right, Denny, thank you. Denny Thomas there. He joins us from Seoul with the latest when it comes to Hyundai. Another ongoing story we've been tracking for you is the FBI has released more images of the person of interest in the fatal shooting of conservative activist Charlie Kirk, with the manhunt still underway. Meanwhile, President Trump says he will attend Kirk's funeral planned for next week and plans to posthumously honor him with the country's highest civilian award.
I'm pleased to announce that I will soon be awarding Charlie Kirk posthumously the Presidential Medal of Freedom.
Let's get the latest now from our senior reporter, Miles Miller, joining us from New York. Miles, I know there was an FBI sort of briefing earlier. What did we learn from that, especially when it comes to the manhunt?
Yeah, so what we learned in this briefing by the FBI is that there are new clues as to who this suspect is. We learned that in the moment after that suspect fired that shot at Charlie Kirk, he then took himself off the building by bracing himself, using his palm to jump off the building, and he really hurt his leg. You see him limping in the moment after he jumped from the building. He darts across a parking lot and into the woods, and it is in that wooded area where police found the gun believed to be used in this incident. We also saw new photos of this suspect, as you see there, the suspect wearing that distinctive black backpack, black shirt with an American flag, that hat with a triangle, Converse sneakers. They released these new photos all in an effort that someone who was in the area may have seen him, may have Ring camera video on their houses that maybe gives them a better look at this person. But what you know is that this does look like there was a bit of pre-planning that happened here to be able to judge where the event would be set up on the mall there of the school, to be able to fire a shot about 200 yards away and hit Charlie Kirk. All of it shows a level of planning that investigators are trying to figure out who this person is. The bulk of the investigation right now is focused focus on the forensic evidence as well, using that palm print, using any footprints, using any of the fingerprints that may be on those bullets, those cartridges that they found at the scene.
Miles, David here, we also understand separately but certainly related to the story is that the state of Utah will be pursuing the death penalty here. What do we know exactly?
Yeah, so in cases like this, depending on if it goes federal or local, these jurisdictions have the ability to decide whether they want to do the death penalty or not. In this instance, the governor here in Utah saying that he wants to pursue the death penalty. If this case does go federal, right now it's being led by Utah, but if it does go federal, the feds have the ability to do that as well. They see this as a political assassination. The governor came out yesterday to say that, and he was echoed by everybody in federal government as well, and so that's the lane that they're going to be taking. Another interesting thing that was said during the press conference that I think certainly is interesting, especially for viewers of this show, is that they believe that that foreign governments, whether it be China, whether it be Russia, are using this incident to spark fear in Americans, and also to use this incident to get Americans to attack one another, whether verbally or physically. The governor saying that he wanted everybody to just speak to their families, take some time offline, because some of the rhetoric online is truly hateful.
Miles, thank you so much for staying up as well. Miles Miller there in New York for us. And you can get really more context on sort of the broader picture here. In fact, our folks at Bloomberg Geoeconomic and the analysis, the team there, and the analysis does show, of course, when you look at this graphic here, so the violence measured by the number of assassination attempts involving politicians is now at a record high, according to the numbers that we've seen here.
Yeah, well, President Trump himself faced 2 assassination attempts last year as well. And it really brings us to, overall, our focus to protests, which
somewhat similar.
Also recently rocked parts of Asia. When you talk about Nepal, what's going on there, Indonesia, youth demonstrations are now showing growing dissatisfaction with corruption and the rising cost of living.
Yeah, Nepali Prime Minister KP Sharma Oli resigned earlier this week after 2 days, and you might have seen some of the pictures on social media, like really intense protests over a sweeping social media ban. Now, certainly local reports say at least 30 people were killed, and the ban has since been scrapped here, Yvonne.
Yeah, Indonesia has witnessed similar scenes as well. Outrage there erupted late last month after lawmakers were awarded lavish housing allowances, nearly 10 times the monthly minimum wage, and that unrest culminated in the removal of Indonesian Finance Minister Sri Mulyani Indrawati.
Let's bring in Karishma Vaswani, our Bloomberg Opinion columnist, and she says that for any lasting political change, the rage and the anger of the youth, Karishma, must be channeled into reform. We've heard that before. She joins us in Singapore right now. Karishma, why is this generation getting quite upset at this point?
Yeah, David, I mean, to put a question back to you, why wouldn't they? Look at the environment that they are facing right now. Slowing economies, a lack of jobs across the region. I think it was really striking that in the 2 most recent instances of Nepal and Indonesia, although in Nepal it was the immediate catalyst behind the protests was that social media ban that you were talking about, but at the root of both of these instances of genuine frustration is a feeling amongst young people that their lives are not going to be as good as the people that went before them, their parents. Also the fact that the system is rigged. That's the sense a lot of people have, that even when you want to try and get a job in these countries where there are very high unemployment rates, in particular for the youth, that it's a corrupt environment, and that unless you are connected in some way to the political elite, you are not going to do well in life. And then on top of that, to have to face in Indonesia, for instance, images on social media and national media of parliamentarians receiving lavish housing allowances, dancing in parliament, in fact, when they received them. It feels like a real slap in the face, doesn't it? And I think that's what speaks to the level of anger and frustration that you see on the streets across Asia in the last few weeks.
Yeah, you mentioned in your column Gen Z protesters really challenging the old guard here in the region. In terms of this generation, then what do you think unites them, Karishma?
Yeah, you know, Yvonne, I think this is really interesting. And when you look at the scale of these protests, and not just these, but in the last couple of years, we've seen them in Bangladesh, right? And Sri Lanka as well. And it really does feel like there is a sort of movement building about toppling the old guard, getting rid of the corrupt elite in the views of many young people in Asia, and trying to put in place something fresh and something new. And I think that's what does unite these young people at the core of these protests. And as I go on to explain in my column, that when you see this kind of frustration out on the streets, you know, it can get quite addictive, protesting, as we've seen in the Arab Spring, for instance, before. And my big concern for these, and many of them very genuine frustrations on the ground, well-intentioned protesters, is that these protests won't come to anything. You know, we've seen instances of this before. For example, in Sri Lanka, when you had those massive protests as a result of overwhelming frustration because of the economic breakdown there. We did see the prime minister removed, but then, the leader of the country removed, rather, I should say, but then very quickly after that, another discredited, corrupt elite back in power, with only elections coming into place, not too long ago, that then saw a new generation of leadership style coming to bear. And I think that's the key thing that these protesters need to keep in mind, that for real change to happen, they have to move the protests off the streets and into the halls of power.
And that takes us into this a fairly loaded question, which I imagine we won't have time to answer, but help us understand the path to solutions here.
Yeah, well, you know, I have tried to argue this in my column, and one of the things that I think is really missing, David, in some of these protests is that Zohrab Mamdani character, right? You know, he has sort of swept and galvanized young people in New York. He speaks directly to their issues, things like rent freezes, universal child care, you know, free bus rides. Now, some of this obviously unrealistic, or I think certainly demands a bit more thought and work, but he is helping to channel frustration into agency and optimism. And that is what you need. You know, when I look back to 1998 in Indonesia, as we've discussed before, I witnessed that country where I grew up go from dictatorship to democracy. Huge hopes for the Reformation, the Reformasi movement. And yet today we're seeing many of those same issues come to bear. For protests to really have meaningful change, they have to turn into policy.
Karishma, thank you. Karishma Vaswani there, Bloomberg Opinion, a columnist in Singapore for us. Just to note, some news coming through as well. The fairly large Chinese gold producer, Zijin Mining, has gotten approval out of the exchange here to go ahead with its $3 billion IPO. That's according to IFR. It's also worth pointing out, I'm just looking at my charts here, that the company's market cap, because of the rally in gold prices this year, is now almost at $100 billion. Plenty more ahead.
All right. There's plenty to look ahead to as well, not just when it comes to Alibaba, but next week, right, when you have one of the two biggest central banks set to meet there. So Fed, of course, that's the big one on Wednesday, and then following that to wrap up the week is going to be the BOJ. Expected to hold there, but the Fed largely expected that they're going to make it through that 25 basis point cut as well. And then, yeah, to start things off, we got a data dump as well from China.
Yeah, that's all coming through, and I mean, I'm almost dreading next week's coverage because I'm going to try and limit myself from talking about the Fed, and that's going to be very difficult.
It's going to be very difficult.
Yeah. Well, that's something for our viewers to look forward to as well, and how Yvonne and I are able to navigate that, navigate the tricky conversation.
Well,
but
these
yes.
Chinese markets continue to go. But that's also somewhat Fed related.
Here you go. You took us. Okay, why don't we talk about AI? Okay, this is something that might be somewhat separate because that's actually something that is continuing with Baidu now. 10%. Alibaba's looking at 6%, 152 right now on the stock price. And actually, you know what? So Tencent hit a record high a few years back at just over 700. So we're probably a good few weeks away from hitting that as well. So just keep that in mind. Hang Seng Index is this 26,000, 63 up, 24 down, 2 unchanged. And I'll leave you to look at possibly a record high on the MSCI Asia Pacific. We're very close. We could get there the next few hours. That's it from us, though. We'll see you all on Monday.